Hey, Alpha fam, welcome back to another episode of Alpha Commission. Of course, on Alpha Commission, we are going to continue our coverage of the major dumpage on the Bitcoin and crypto charts. You do see some of these poo coins just continuing to pop off. Of course, we do have good old good for nothing EOS, we have good old good for nothing Lunch, and we have, of course, just a couple others. Adam, nice project, good project, solid project. No disrespect to Adam, but we got just a bunch of red on the charts, and of course that was expected. If you did watch yesterday's episode, you would have found out that there was a calculation that you could have used in order to predict the direction of today's market. And it's funny, but yesterday was one of my least watched videos, but it was probably one of the best warnings that I've given, since we've just had these other major dumps, and I called those ones. Well, I was suggesting the calculation for how to determine on your own whether or not we were going to dump, because of course I can't just hold your hand through it. And what you do see is just red on the charts. This is of course the stock market in response to Jerome Powell, in response to the PCE data, as well as response to the GDP data yesterday. I believe there was also consumer data, but that's just the least important of it, to be honest. But taken all together, we are having a major red day. These are not small numbers for stocks, so this is significant. While previously and earlier in the week we were talking about just modest profit taking, kind of a potentially bullish pullback, this does indicate a little bit of a sickness, okay? A little bit of a weakness. The cracks are starting to show in the market. And so, guys, it's important to kind of catch these episodes in a timely way when we are sitting on the precipice of some of these cliffs, when we are just hanging out in the middle of ranges. You may want to understand what is the key information that can tip the market one way or another. And of course, we were looking for that PCE data. You can see that, we did come in just a little bit better than expected, so we didn't plummet to hell or anything like that. You do see that these numbers are just more or less on parity, right? And so, what was the equation that we were using? The equation that we were using is that if the GDP is just nominal, right, nominal change, you can see just 0.1 off here, right? That's nominal. That's basically a wash, right? And then if you can see that the PCE data is just nominal, it's just basically a wash between the previous measurement or the expectation and the calculated result, then you can see that this is just zero point 0.1 difference, just 0.2, but out of a basically 5%. So just basically no big deal. And what I was saying is that if you had significant deviations, you were likely to see a major move in the market by either of these numbers, either on Thursday or on Friday. But what we got was just a neutral, number that is just pretty much in line with expectations. And when these numbers are in line with expectations, the gross domestic product, of course, is a reflection upon how serious a recession might be. And then the PCE data, of course, is a reflection on how bad inflation might be. Then if you're just seeing, these calculated results, the actual measurements just kind of matching or approximately in line with the expectation, then you understand the market has already calculated them into the price. And so, what was the third factor that I mentioned to look out for if both of these ended up being nominal, that's the wild card of Jerome Powell. And if he was hawkish, then you should expect the market to go down. If he is dovish, you should expect the market to go up. And of course, Powell's remarks were that he expected more pain to come. That's what he said. Expect more pain to come. Expect the Federal Reserve to fight inflation, continue to fight inflation. That means that interest rates are likely to continue to increase. You're getting a heads up. And so that means that maybe in September or perhaps at the end of the year or even in quarter one 2023, you could still see another big interest rate increase, which does mean that the market has to price those in. I gave you a clue previously, which is that the market was counting their chickens before they hatched. The market was counting on the Federal Reserve lowering rates 3 times next year in 2023. That's what our current prices are based on. And what they did not expect is that Jerome Powell would come out and say he's probably going to increase rates. You see how there's a little bit of a difference there? You see how that could be a little bit bearish for the market. And so, what was the result? We dumped, right? We just got a nice, swift kick in the pants dump down to Goblin Town. And of course, this was pretty much in line with expectations yesterday, which is why I did end up even changing the thumbnail of my video in order to change the word report to danger, because I wanted to warn you guys more strongly that you need to pay attention, that we really had a danger coming up. And although for some reason yesterday's video was one of my least watched videos, it was probably one of the more important ones. And so guys, again, like, you got to just stay on top of this stuff. You can't just click on the bullish videos. You're not going to get the information that you need. And if we took a look closely at this price action over here, right, if we just zoom out just so we can see where we've been, this was the major drop over here in June. Then we've been chugging along. The Alpha Fam bought in right here. We bought in right here. We bought in right here. And we sold up here, and up here. And so the Alpha Fam has been sitting pretty both on Bitcoin and Ethereum, as well as some altcoins like ADA, Zilliqa, and Kadena. We have just been killing it if you've been following our logic. And of course, many of these calls were given several days in advance as data allowed for it. Others were just kind of a seat of our pants, up to the moment where we just had to make a decision. But overall, if you've been following along either in the Discord, and there's a Discord link in the description of the video before, or if you've been following the videos, then you understand that, whether you're talking about an altcoin or whether you're talking about Ethereum or whether you're talking about the Bitcoin chart itself, which is what we're looking at, the Alpha Fam got in down here, right? We even took the risk on this one because, of course, we are very good at macro on this channel. The group of people that I'm surrounded by, we talk about macro all of the time. And so, of course, there was a high confidence that we were going to get a pop up based upon the macro. And while everyone else was caught off guard almost everywhere, not their faults, this is a really confusing and very treacherous market. Everyone thought that this was going to dump, but because of the unique calculations, the unique way of, basically doing technical analysis that we have at Alpha Commission, we took this trade to the long side and were highly rewarded for it. Of course, we also saw this very just clear technical pattern, right, appearing on the charts, which of course was that rising wedge, which after 1, 2, 3, 4, 5 touches had a 70% likelihood of breaking down on the measured move, which would have taken us to, lo and behold, look where my measured move takes us to, 20,500. Where did we tag precisely? 20,500. Is this magic? Is this wizardry? Or is this just TA that sometimes ends up working out? Of course, we can be off by a couple bucks, but I did say that we were very likely to catch support in this area, and that we were very likely to work our way down to this number, which of course does correspond also with the first valley of the rising wedge, which is covered by the shelter, and that's the way that I prefer to take the measured move of a rising wedge, even though there are about 3 different calculations methods for a rising wedge. That's the one that I prefer. A lot of people take this diagonal. That's fine too. You can see it works just as well. And so either way, we've hit the target for this rising wedge. This rising wedge has now fully completed its move. We can just disregard it. And if we do have continuation to the downside, I did mention that we do have a little bit of support down here in this kind of 19,000, 19,500-ish area. You kind of see this bounce here. You see these wicks, kind of putting in a little bit of a chop there. And then you see this wick right here, right? That can all be turned into support around this 19,500-ish area. But if we do go down, I mean, just historically speaking, it's never been good when we've broken from these big sideways formations to the downside. We do get a little bit of chop on our first leg down, and then woo, we just go all the way, right? We just go all the way down, chop, 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 drop, right? Got the chop and the drop, chop, drop, drop, maybe. And what were we talking about? That there were some measured moves for this bear flag that we have going on, and that if we just look at the bear flags, all over the place on this chart, this one worked out really, really well. That was a huge bear flag, right? We have another huge bear flag kind of being put in here. Not 100% sure how to draw it, right? We could be a little bit more conservative on this one, but like let's say like this, right? So let's bring this one, its counterpart over here. And, because this is basically the equivalent of this one, okay? Like it's basically the double, right? It's the double hitter. And so that could take us, anywhere to, 2,000 bucks if this market really decides to shit the bed. And do I think that that's going to happen? No, I don't. Okay, this one is not the one that I'm using in my mind. We also have this bear flag right here, which could take us down. Again, I don't know exactly where to line these things up with, but it can take us down to like anywhere between 16,000 to 10,000 bucks. Okay, I'm not going to be too exact with that one because we also have this bear flag, which I was pointing out to you. Another reason why we're so likely to break down is we have all these bear flags. We have another bear flag, right, which has some type of a measured move to this kind of 18,000, $17,000 area. And I'm not going to go over horizontals. We went over horizontals a couple episodes ago, so I'm just showing you all these kind of bear flags that are on the chart, and I'm not sure exactly where to line it up. I mean, this is all like choppy, and it's just, I could take it from the bottom. I could take it from where this wedge was breaking down. You can see we had a rising wedge going here, and in the group yesterday, I did call out this rising wedge. I did make this channel, and as soon as it broke the wedge, I made a comment, plop, right? Just plop, because basically you can see that as soon as we broke out of that rising wedge, it was very likely, that we would just continue to the downside. So, again, 10:30 p.m. yesterday, plop, right? We broke that wedge. So it is good to kind of keep up with the group. If you guys want to sign up to the Discord, there's of course that link in the description of the video, and you can just kind of hang out with us and share your ideas. So we not only had this type of a rising channel, but we also had this kind of gray kind of rising wedge inside of it, and so both of them have now broken down. And if we come back up just to test the breakdown, that could make sense. There's a little bit of an exposed candle here, which could have some retracement, just kind of that retest of the breakdown. But I would suggest that we're going to continue to fall probably into that $19,000 area. And some of you guys were pretty upset with me, when I said take your profits on Kadena at $2.40, and then if we get a bullish, retracement, then perhaps we can have some type of extended goal. But then when we started to break down, when we lost our entry, then of course we have to have our stop loss triggered. If you took this type of a pullback, and, we made a good 60% on Kadena, so, having to eat a little bit of a 5% cost on your stop loss, that's not a big deal, okay? Because you already took your profits at $2.40, right? Where we had this gray line here, right? You can see it kind of highlighted where we just have a box that just signals where I actually sold. The gray line is where probably is most technically valid to sell. And then this red box is just, if you were just eyeballing it, where you would probably want to buy in, or pardon me, where you would want to sell at. And so we did. We took our profit in this zone because nobody can get the technical perfection, right? And so we took our profit up here, and then we just waited for a pullback. Of course, this thing never stopped falling, right? So it basically just continued to go down to our diagonal support. A lot of people were suggesting that I should recommend to buy in on this bounce, and I told you in two different episodes I'm not going to recommend buying in on that bounce. I won't recommend it because I think that we're entering a phase of a downturn, whereas over here I was recommending buying all over the place, right? And so why wouldn't I suggest to buy in there? Well, guys, look what's happening. I mean, it's not exactly the most beautiful formation going on here, right? And so we do have to see how things settle down at the end of the day after all of this volatility with the Federal Reserve. And one thing that I was mentioning was that we've done the same thing in the past with Kadena, where we have just this type of a diagonal, and then we have a bunch of pumps and, basically 100% retraces to the diagonal base here. And then what happens? We fall off a cliff, right? So same thing here. We're getting 100% retraces off of this diagonal line. And, basically we have the chance to potentially fall off of a cliff. And so, no, I'm not going to recommend to buy in, when we're having, this kind of a psychological fractal on our previous price action. As much as I love Kadena and I do love the project, I think it's a great project. Definitely worth, being one of the coins in your bag, depending on trading conditions. But would I suggest buying there? And I said no, right? Very, very clearly no. And look what happened. We just had a full retrace of this move. And if Bitcoin and if crypto continue to go down, then what's going to happen to Kadena? It's going to lose this support. It may come back down to the bottom of our box, and then it may even check these lower levels. So we have to be very careful right now. We have to be very clever. And if I think about Kadena, let's just look at what's going on here. I mean, yeah, I mean, it doesn't look great. It's not the best look. So, I'm just not interested right now. I'd rather see how the market plays out. And then if we look at ADA, basically the same thing. See, I got a little wedge here. This is the area where we're kind of meeting at. Pull my line out a little bit. Look at that. We're tagging it perfectly. And of course, if we break down from that, it's a very high possibility that we can if Bitcoin continues to the downside. Zilliqa, we're now under that entry point, right, that I suggested for the possible, pattern retouch. If we look at this one, then you can see that we had this kind of Cheshire cat pattern going on. This is just a BS, guys. I'm just kidding about the Cheshire cat pattern. But you can see that we broke down from this kind of curved wedge. Let's call it a curved wedge, right? A curved rising wedge. Broke down, reached my support. You see this blue box right here. Maybe I can make it a little bit brighter. There we go. Yeah, this blue box. And, we've just been basically trying to hold on to the support. But if this is a doorway to the next level below, right? If this is a doorway to the next level below, then we've been knocking on the door quite a few times. And, what we're at risk of is that somebody's going to open the door, right? If we keep knocking on it, somebody is going to open that door. They're going to answer the door, and we're going to fall down to the next level. So just be careful, guys, right? Like, as long as we're in this type of pattern, we're just testing a couple times, getting really nice bounces off of it, even testing the higher support areas, then of course I can recommend, being buying and getting in and then taking our profit at some of these higher levels, right? You see this sell box up here. Sorry, I make these things so faint. I just don't want them to be distracting. And so, of course, we can take our profit there. And then if we come back down and then we lose, right? If we lose this support, which we did, then we just have to exit the market, right? Sorry, we lost that support. And of course, we had a curved rising wedge, right? These curves really confuse a lot of people because they draw straight lines, but we're drawing curves. Broke down, caught support again. That was good for a 15% trade, right? And then, as soon as we hit this previous support area, it turned back into this resistance that it used to be, which is what's expected when you break down from a formation. Then you usually get rejected. It's just a retest before continuing to break to the downside. And then what happens? Do you think you just turn around here after you've already broken down, and then you've tried to hold this twice? You checked back up here and you got rejected again, once, twice? No, the most likely thing is that you continue to fall down. So, best case situation, we hold this level and then we just try to start over again, just completely start over again and try again. But if the market has rejected these prices, then we also have to be highly aware that we are at risk of falling to the downside here, and that's what I was trying to warn you about. You see it on ADA, going to probably test the bottom of this box if it breaks down, and then of course Kadena, probably going to test the bottom of its box. If it does break down from this diagonal. And, we had a good run, guys. We had a good bull run, and now we just have to, pay the piper. Like, the bills have come due, from all of this energy that we've, built up here. We have to have some checkbacks. We have to touch the grass, so to speak. And so that's what's going on right now. If we look at the VIX, then of course you do see the VIX is just spiking up like crazy. It's actually risen since the last time I looked at it. And so volatility on stocks is just skyrocketing. That is not good. What did I tell you guys? If we re-entered this friggin' wedge, sorry, I was on log chart there. If we re-enter this wedge, then it's not going to be good for trading. We have the potential to come all the way back up to this kind of hellish area that's really bad for trading. And as the VIX is rising, that's when it's worst for the stock market. And if it's bad for stocks, it's bad for crypto, because crypto trades like stock meme, coins, or whatever you want to say about it, man. It's Bitcoin trades like a meme stock, and so of course the rest of crypto is just going to follow. Same thing with USDT dominance. We were here. I was suggesting there's probably going to be a turnaround. It's not going to be very good because look, we broke out. What are we doing? We're just doing a check back, right? So what's going to happen? Why did I have that arrow there? I was suggesting that it's probably going to pop back up. It broke this level already. And so once having broken that level, it proved that it wants to go there. And so look, here we are. We're going to probably go up to 7.1% and then maybe do another chop around or push through and chop around or something like that, right? Because we do have kind of a resistant level right there. You see this touch, this touch, this touch. So what's this doing right here? It's just touching right here. That's nothing. I mean, it's already retested it, so it's probably going to continue to push up, just like some of these charts are probably going to continue to push down. And so we have the VIX, we have the USDT dominance, and then let's check out the dollar. Oh, looky here. What did I suggest? The dollar might come back to this diagonal. Just check it and then continue to go up bullishly. And while we could have a little bit of a reprieve, probably it was going to come up, make its way to this, to these higher numbers eventually. Of course, there was the possibility that it could just break down. And if it had lost this diagonal, then we could suggest that, maybe it would catch support in this area. And then only then would we have the chance to test lower. But of course, what happened? Just a really, really bullish check back to this diagonal. It even got front run. People in the market weren't waiting to get into dollars. They just got into dollars. They sold their crap fast, right? Whatever they were holding, be it crypto, be it USDT, be it stocks, be it whatever, they sold it, got back into dollars, and look at this wick. I mean, that thing just sprang up, right? And that's a 4-hour wick. So that was a very, very brief amount of time that just a ton of people across the world got into US dollars, and nobody was waiting for this thing to come down. Okay, like this is a bull flag, guys. This is a bull flag. And if you want to think, where could that bull flag potentially take us? I mean, you can think about it as maybe this entire flagpole, in which case, you could see 112, or you could think about this just kind of like a little bull flag here, which could take us, basically right here to 110. Either way, this thing is looking bullish, guys. So, yeah, buckle up because usually when the dollar is bullish, that's not good for the rest of the market. And what do I always say? If the dollar's not good and USDT is not good and the VIX is not good, then that's not going to be a good trading day for longs. So if you're going long right now, thinking that Bitcoin has hit the bottom, you might be in for some nasty surprise as we test perhaps these further lows as those altcoins that I was showing perhaps come back down to the bottom of the range. In fact, everything looks pretty similar. You can kind of draw the same diagonal on Bitcoin that we have on all of those altcoins, right? And you can kind of see the same sort of thing going on, which is that if we lose this diagonal, right, then most likely we're going to test the bottom of our range, which is going to be that 19,000 dollar area. And whether you consider this line right here or you consider this line up here, I mean, I should probably pull this down a bit, actually, to be honest. Not sure why it was so high there, probably because of log chart versus linear chart. Guys, that function of log versus linear, it's so confusing if you accidentally leave yourself in like one mode, and then like the charts just shift around on you, you know what I mean? I mean, it's a simple thing, but it's very easy to forget. So I really apologize to my viewers if sometimes I leave log versus linear on. It's just you're supposed to use log when you're looking at like exponential growths, okay? Like parabolic actions. Use linear, use just regular, arithmetic, charts, when you are doing normal trading. Let's see here, guys. What else can I do to kind of convince you that we have the potential to continue to go down and that this bear flag is perhaps working its way down and could even breach the bottom of our range if we don't catch support on this type of, bottom down here? I can actually just bring this down. You see that our bear flag right here, it remarkably comes down to the exact bottom of our range, right where we wicked before, right? And so if we do have some type of temporary support in that area, I mean, maybe, right? Let's see how our weekly EMA is doing because, hey, look at that. Look at that. That area is also confluent with the 300 weekly MA, right? Which I was suggesting could also potentially give us support, just like we had support on the 300 EMA, and for a while we had support on this 200 MA. Well, maybe we could get a nice bounce here off of the 300 MA, this thin white line, which is one of our moving averages, okay, just so you guys can visualize that. And that's a weekly moving average. And of course, that just lines up right there at our measured move, right, of our bear flag. And so there is a little bit of confluence in that region for where we could potentially dump to. If this mid-level, I mean, it's kind of the bottom of the range, but it's still kind of mid-level. If that doesn't hold, then maybe we just dip down there, okay? I don't know, guys. Once we start really falling hard, once people start taking their money out of the market, it's really hard to predict where the bottom is going to be, just like it's hard to predict where the top is going to be. Of course, we can look at all these different abstractions. We can talk about fibs, we can talk about EMAs, we can talk about horizontal supports, but at the end of the day, the chart often surprises us on what levels it pushes through and also where it likes to catch itself, especially at the bottom of the market. We have seen time and time again crypto just catch itself at the bottom of the market at very weird places, just kind of floating in the air. And I strongly recommend you to review past bear market bottoms where the price actually caught itself, and often it's in the middle of nowhere. Okay, it's just the market decided that's the bottom. Guys, let's see. Just again, what else can I show you to convince you that maybe it's not the best time to be taking a long right now? Um, Again, I'm not trying to really give you financial advice or anything. I'm just saying that we are really pressing into this diagonal support, and unless we get a clean bounce and break, let's take a look at my updated momentum lines. Well, looky here. Like we have to cleanly get above $21,200, and then we have to cleanly get above $21,600 in order to preserve any type of momentum to the upside today. Okay, like when's that gonna close? When does the day close? In 4 hours. So that's valid for the next 4 hours at least. But it's probably gonna be saying pretty much the same for tomorrow as well. But if you want to have any chance of bullish momentum, you got to basically take out 21,600, guys. And that's a pretty big order to ask when the Federal Reserve is basically telling us that they're going to increase interest rates, and all this run up was based upon the premise that the market thought that the Fed's going to cut interest rates 3 times next year, and Jerome Powell's coming out and saying he's actually going to most likely increase rates. Okay, so what's more likely, that we go to the next level lower or that we go to the next level higher based upon that news? I mean, use common sense, guys. Like it's most likely we're going to the next level lower. We can't just hang out in the middle here. We're not like just gonna chill out, in this zone. Like we're not just like, teenagers hanging out at a coffee shop. Where are we? We're in the middle of the range. Look at this range, guys. We're in the dead middle of this range. What are we gonna do? Just chill out here forever? We're gonna break down to the bottom, or we have to get over the top. We have to get over the top, solidly sit over the top, and then continue to bounce in order to continue bullishly. Do you think that's going to happen? Look into the mirror, ask that question to yourself. Do you think that's going to happen based upon the current conditions? Most likely not. Okay, most likely not. Let's be honest with ourselves. Most likely not. What's more likely is that we fall down and then maybe even breach our lower levels as we determine that this market was over exuberant, right? And of course, then, carry out this bear flag, and then we can reassess, once we get to this area, right? We can reassess once we get to that area. Let's see here. Volatility. Let's look at our volatility because first of all, this, a lot of people think that like these type of oscillators may be giving a buy signal right now, kind of but it's not. This is still turned down. This looks actually bad to me, okay? And then if we look at just our regular volatility, it looks like we actually are going to continue to push a bit. And so if we've been basically expanding to the downside, we could still expand to the downside just a little bit more on our, ADX DI. The DI negative is basically, pumping. And so could we continue bullishly under this conditions on the daily? Not likely. We're going to have to see, we're going to have to see this green line just pump up. And that's not happening, right? Like it's actually headed down. What did I say about the RSI warning yesterday? That we were approaching this line, and that what was the most likely thing that was going to happen? That we would get a rejection. What did we get? A rejection. And so you see us coming down, and often when we get rejected like that, what happens is we put in yet another low, right? So we get like 1, 2, 3, and then somewhere around, after 2 or 3 of these, the thing turns around. You can get a whole bunch of them. This is the daily chart, but we've only got one. We've only broken down one. So what would I expect? I would expect at least one more breakdown. We're partially broken down, but there's got to be another half of that somewhere. And then, of course, we would have the chance to continue to go up. But I would like to see this move to continue itself to finish, because this is a very weird structure on the RSI. It's not typically how it works. And so, I want to see, either a clean break of this EMA to the upside or the rest of the down formation. So we're just watching the RSI. I mean, again, like we have support levels below us, right? We don't have to just fall to hell immediately, but it just doesn't look good as long as we're pushing through this kind of diagonal support area that we have here, which, to be honest, looks pretty thin to me. Yep, and let's see. Oh yeah, and in terms of the professional exchanges, let's see here. Oh, that's weird. There's a huge price difference between the professional exchange and wow, the professional exchange is 20,350, but the 24/7 exchanges are 20,000, 650. That's a $300 difference. That's a huge difference. So you do see this looking much more bearish on the professional exchanges. Not sure what that's about. That's not good. But if we look at the volatility on the professional exchanges, yeah, look at this. This one is expanding the price action to the downside, and it's not even close to being done, guys. This is not even close to being done. So What would I suggest? I would suggest we're going to continue falling. Based upon the professional exchanges, I would suggest we're going to continue falling. And this one looks ugly too, guys. So this looks like, again, like it just wants to make another kind of low formation on this RSI. And so, yeah, I'm not seeing anything positive here. Not seeing anything positive. Same thing for this guy. Like we need to get over that that 21,500, $22,000 area. So for the professional exchanges, yeah, I mean 21 to $22,000 needs to be taken out. Otherwise, we're just going to continue with momentum to the downside. So just for our momentum here, if you want to carry it to the upside, like we have to spike up immediately, and it just looks pretty bad, guys. It just looks pretty bad. So, yeah, I'm probably going to end it there. Again, yesterday was probably just a really amazing warning. The last couple videos have been preparing you for this potential downside. Please check out yesterday's video if you didn't. There was some good information there. And then, of course, daily I do try to give you some type of, tips and insights. But guys, that's your alpha for the day. Stay safe and happy trading.